AVI is primarily a food company with more than 53 brands in its portfolio, including Five Roses, Baker's, I&J and Willard's. It also has shoe and clothing brands and a beauty products portfolio. AVI has a market cap of 18 billion rand, a price to earnings ratio of 16 and a dividend yield of 3.3%. AVI, how are we tracking on this one? Let's go through the story. Sasha.
Yeah, last time you did this, I think they were trading near their all-time highs. I think you did this in early February. So it's come back significantly like the rest of the retail sector. I think what's a lot to like about this business, and we've liked them for years and years, held them in fits and starts. You know, it's a brands business, so that's why you would say, well, what does, you know, crusted hake have to do with Spitz shoes? Well, ironically, the shoes are a much better business than the hake, because the hake, I think, contributes 5%, that's I&J, whereas the shoes are a much bigger contributor, and they've got fantastic margins there. So the whole idea is that they're going to continue to grow and leverage off the old business, because an old timer once told me, just buy a tea and biscuits company and fall asleep, because everybody likes tea and biscuits. I think they're a fairly good management team, and they're quite young comparatively. You know, I think Simon's not even 50, and the financial manager is in his mid-40s or so. So nice bunch, a lot of energy. I think they're going to go places.
Daniel, let's get your view on AVI.
Yeah, I basically agree with everything Sasha said. I mean, it's a great company, excellent management. They're superb at managing brands. You know, part of the reason why their shoe business has done so well is because they've created such a brand awareness of those shoes that you would have people saving for months and months to be able to afford a pair of those beautiful Corvettas, for example. And they make fantastic profits off that.
I see this is what you may be doing.
I'm not. I'm
still saving months and months.
Yeah, I'm still saving up. Hopefully soon. So
they're doing something right, a lot right.
It's a great business. They produce a lot of cash, and they are excellent at capital management. They're not like other companies that hoard the cash and don't pay it out, for example. So when they are making too much cash and they can't find a good return on investment home for it, they'll pay it out to shareholders in the form of a special div or a lower dividend cover, which means a higher dividend.
Sasha, hot or not?
Yeah, hot. They've got a pretty attractive dividend policy going back years and years. I think 2 times cover has normally been the case. I think, you know, after this recent price fall off, hot.
Daniel, hot or not?
Right, I mean, it's pulled back quite a bit. At these prices, the forward dividend yield in terms of what you can expect to get is tracking, it's tracking close to 5%, I believe, which is quite attractive. That's the gross dividend, that's before your dividend tax. So based on that alone, I would say hot, because that creates a very strong share underpin